What's up, guys? Welcome back to another video. Today we're just doing a little POV psychology video inside the Alfa. We're just on the way to the gym. Snow is crazy out here. It's super cold. It's 34 degrees Fahrenheit. I miss the summer so much. Cannot wait for the summer. I have a few trips planned to Spain and Toronto with my best friend. So I'm looking forward to that. But anyway, today I wanted to get on here and just talk about some stuff that I struggled with while I was unprofitable. One of those things being how to deal with my losses. When I was unprofitable, I had a really hard time just being able to stomach my losses, and every time I took a loss, I always revenge traded. I always broke my rules, over leveraged, getting in the I need to get that money back mode, which is completely the worst mode to be in, especially when trading, because when you're in that mode, you end up over leveraging. You 10 times out of 10, you break your rules. So yeah, when I was unprofitable, that was a really big issue for me. I was just not able to take losses. Once I learned how to take losses, which after about 500 times of doing the same thing, once I learned how to take losses and understand that losing is part of a winning statistic. You guys need to understand that losing is simply part of a winning statistic. You want to be profitable, you need to lose. There's no strategy that is 100% win rate. If anybody tells you that their strategy is 100% win rate, they're lying to you. They're straight up lying to you, scamming you. But yeah, that's one of the main reasons why I did change my strategy at the start. When I first started trading, I started with, the basics, TZR bootcamp, trading his strategy, liquidity sweep, break a structure, fair value gap, inverse fair value gap, entry with a move out of that. But what I found with that is that strategy definitely works. It works for thousands of people across the world, but however, it just did not work well for me, simply because that strategy, you need a lower win rate. You need like a 50% win rate with a high RR to be profitable trading reversals. So that's why for me, I changed to continuation models. That gets me about a 70 to 80% win rate over a long-term basis. Which me personally, that is just way better for my mental. When I was trading a reversal strategy, I just kept losing, like losing, and my win rate was so low. It was like 50% flat. And for me to be profitable, I needed consistent 1 to 3 RR trades, 1 to 3, 1 to 2, 1 to 3, 1 to 4 RR trades consistently. Hang on. They build their prop firm rules to break you. You got to look at it like this. Prop firms, they are a business. They build their prop firms to make rules in a way which will negatively hinder your psychology, your strategy sometimes. If you guys have a $2,000 buffer, right, why would you go for a lower percentage win rate? Why would you do that? Or even I'm talking from a 50K funded account perspective. If you have a $2,000 buffer, right? Say if you're risking $200 a trade, you could do that with a 50% win rate, but it's so low. Why would you guys not rather trade a high win rate, 80%, 75% model, and win a lot of your trades and risk heavy on prop firms? That is the reason. That is the mainly reason why I switched to continuation models, because you can risk so heavy and you can make a lot of money in a short period of time, rather than trading reversals and having to consistently build up your buffer, and you have to wait so long to actually have enough buffer in your account where you can risk a heavy amount. Like, even when you're trading if you're trading a high RR strategy, you need to risk so little because your win rate is so small. Anyway, let's get back to what I was talking about. I ranted a little bit there, but this video is strictly about how to handle losses. Like I said, you need to be comfortable with losing. You need to be able to stomach losses. If you guys cannot stomach a loss, trading is not for you. If you guys go until after every single loss you take, while understanding that that loss is a statistical loss, not a human error. You need to understand how to tell the difference between a human error and a statistical error. If you follow all your rules, you know, another issue that I have is sometimes I trade. So I have a continuation model. I'm looking for a move out and then a retrace and then just catch the flip on the way up to my draw. A lot of the times when I lose, a high percentage of my losses come after we have a move up and then we consolidate for like 10 minutes and then we have another move up. When I enter that, I find that my win rate's still decently high, but it's lower than if I had that, damn, they got him in cuffs. What was I saying? Oh yeah, I found out that my win rate is lower when the markets consolidate after making a strong move up. I don't want that. Okay, so it's just finding little tweaks you can make to your strategy, which also comes over time. That is also known as creating your edge in the market and your own sort of discretion in the market. That only comes with time. That's why a lot of people say when you first have your strategy, when you first get your strategy, you do not want to be pattern trading it. That's another big rule, or a big mistake I see a lot of beginners do. They pattern trade without any sort of discretion. They have no discretion. All they see is the inverse for value gap. Boom, that's all they need to enter. But on the higher time frame, they might have taken some liquidity, some buy or sell side liquidity, or maybe the markets are chopping in the higher time frame, in the 4 hours. So the markets are consolidating in the 4 hour, but they're extremely bullish in the 1 minute. That alone is just chipping away those lower probable wins. Even though the lower probable wins might be 60%, I guarantee you guys would rather take 80% chance of winning your trade instead of 60% chance. It's like a no-brainer. If you guys had a salary to make $1 million a year just to take 80% chance or 90% chance trades, you guys will do that, no brainer. But for some reason, you guys are so antsy and addicted to go to the charts. You guys want to take low probable setups, lose. When you lose, you go on tilt because you know you shouldn't have taken that trade. That is another thing that I had to sort of improve on when I was unprofitable, was the fact that I would take low probable trades, and the fact that I knew I wasn't supposed to sit that trade, more times than not, I would be like, oh bro, I need to make that money back. No, you guys need to wait for your perfect setup so your losses are only statistical losses and you can be happy. There's such thing as a good loss, guys. You can take a loss and it be a good loss, especially in a statistical sense. You guys need to understand losses are part of a winning statistic. You guys can easily make 10K a month, easily 10K a month, if you just stick to your model and only take high probable trades. Trust me guys, if you literally, for the next 20 trades, okay? No, actually no, for the next 10 trades, for this whole month, if you only took high probable trades, I guarantee you get a payout. I guarantee you get a payout. Only high probable trades for 10 days. You get 20 trading days every month. That's a trade every other day. That's even a pretty high frequency in my opinion. But even if you trade those 10 days, say you two losses, 8 wins, that's $4,000 across 5 accounts. Split that in 2, that's a 10K month right there. If you just follow your rules and take high probable setups, do not revenge trade. Even if you take a loss, you need to stomach that loss and understand it's part of a winning system. If you take a statistical loss, even if you take a human error loss, you need to understand your mistake and improve from it. It's as simple as that, guys. Another mistake I know this video is about how to handle losses, but I'm going off track a little bit. But also another thing I see unprofitable traders struggle with, and what I struggled with myself, is the fact you guys need to simple out your strategy. Simple out. Use a couple confluences. Don't use a million ICT concepts. I feel like ICT, it's very, very, very good for learning structural analysis. However, it's just difficult to understand what your actual model is. Like, I used to trade ICT. What I did, I would learn every single concept: order blocks, breaker blocks, SMT divergences, consequent encroachments, Fibonacci extensions. What else? Silver bullet model, 2022 model. I already said that. But anyway, what I'm trying to get to here is the fact that there are so many different confluences. I feel like ICT can get to a point where you have so many confluences, you don't even have a model. Like, one day you're trading breaker blocks, order blocks, next day you're trading fair value gaps, next day you're trading rejection blocks, next day SMTs. Like, it's not consistent. And one thing with a profitable model is that it needs to be consistent over a long period of time. It needs to be consistent, and it needs to be something that repetitively occurs in the markets on a month-to-month basis. The difficulty I had with trading ICT is that every time I took a win, it would be for a different reason. Or even if I take a loss, it would always be for a different reason. One day if I take a loss, it would be because, oh, I didn't see the breaker block. And then one day if I take a win, it was because, oh, I saw a fair value gap instead of a breaker block. And vice versa. One day it could be, I saw a breaker block instead of a fair value gap. Like, it's not really consistent, but it definitely works. It definitely works for people. But in the prop firm game, you need a high win rate. You need a high win rate, a low RR setup, so you can ensure you risk heavy and you get your payouts. You get your payouts. That's all that matters on a prop firm. You need to treat prop firms like an ROI game. One account is what, $89 on Top Step for a non-activation fee account, or $50 with $129 activation fee. You guys need to make sure every time you buy an account, say you buy an $89 account without an activation fee, you need to ensure once you pass that account, you get a payout of more than $150, more than $89, sorry, which I think is extremely doable. The average payout that I've gotten, I've never gotten a payout lower than $700 on each account. Okay, nothing lower than $700. So that means you're guaranteed. That means you're guaranteed at least a 7x, 8x return on your investment. That is a no-brainer, guys. You need to treat the prop firm space like an ROI game. Once you get your return on investment, then you can start risking extremely heavy, and that's where you make your money. That's where you make your money. You get one payout, and then you start risking. Sometimes I risk half of my account. I normally risk a third of my account once I get that first payout. Start risking a third, and then that's when you grow big. That's when you build that account up heavy. That's when you build it up heavy. The reason you guys tilt, like I said before, the reason you guys tilt is because you take bad setups and then you end up getting mad that you take a bad setup, and then you take another bad setup, you over leverage, and then just like that, 3 minutes, your account is completely gone. It's that simple, guys. Trading is one of the only professions that you can completely erase 3 months, a year, up to, yeah, literally a year of progress in 10 minutes, 5 minutes, 1 minute even. All it takes is that one over leveraged day. All it takes is that one bad day to completely wipe out all of your progress. That's why trading is such a mentally challenging profession to be in, because you need to ensure that you're following your strategy consistently and that you are able to stomach losses. No other job in the world, if you have a bad day, say you're working a corporate job, if you have a bad day, you stay on your payroll, you stay getting your consistent salary. If you have a bad day in trading, you could lose your whole year's salary. So that's why risk management is also extremely important. I'm just rambling on here, guys. I'm gonna make a whole nother video, a couple more psychology videos. Look at that, guys, an Alfa on on a truck. That just shows how reliable these cars are. I hope you enjoyed this video, guys. If you want to see more psychology videos, make sure to subscribe, leave a comment down below.